back to the Florida CME Group here Wednesday, August 3rd. I'm Killer from Treasury Curve. Got cash, I can help. Hold on, folks. You got to plug your nose because this market has jumped off the highest diving board out there and it is underwater right now. Currently, we have seen a little bit of a bounce in the S&P off that 1230 and a quarter level, but ever since we broke that 200-day moving average, you knew the computers were going to come in the high frequency trade system, were going to come down and smack it. You know, we look at the Treasury market. You know, if you watched my CNBC hit last Fast Money last Wednesday night, I called for the 10-year to go to 2.5%. Well, that plan came to fruition. We saw 2.56% right now on the yield in the 10-year. We've really seen a grab for Treasuries. The safe haven trade continues. They're buying gold, making new highs in gold. You know, people are really concerned about a potential flash crash. If we got under that S&P 1225 level, get into the bomb shelter. Armageddon is here. So people, all these things we've talked about, all these different historic headwinds, all the moving parts is finally coming here, and we're down about over 100 points in the S&P the last week and a half. So a really substantial move. We've been looking for this move. It's going to create some buying opportunity at some point because, you know, Uncle Ben and team have to come back in and say all is well, do the Kevin Bacon from Animal House and put a floor in this market. But right now there is no floor in the market and markets are flying. So you got to get on the right side of these trades. This Treasury trade, this 30-year, they continue to grab it. That Ultra Bond's up another 2 points today. So we're seeing that Treasury grab persist and you can't fade it yet. I think that 2.5% in the 10-year is an important level. We could rock underneath that and see that continued price action go higher. So by the 2.5%, you have to reevaluate position. Hopefully you're long according to the killer insights I've been providing. But I think it's a time to feather out, take some profits, and reevaluate at 2.5%. Crude oil, you know, we saw it come off a bad inventory number today, so we really saw that sell off as well. I don't know if we're going to see that translation to the pumps there. You know, oil's moved over, you know, nearly 10% in the last 6-7 trading days. I don't see the translation at the pump, but nonetheless, we're seeing markets move. Europe is still up. You know, it's above that 140 threshold. That could be the trade you want to do a little recon on, because once they break that down, that Eurozone situation, it should fall into the upper 120s. Good luck trading today. A lot of moving parts. ADP obviously came in a little bit stronger than expected, but no doubt about it, folks, everyone's looking to Friday's number, the non-farm payroll. One other thing, be the hammer, not the nail.
Bacon is good for me. Bacon is good for me. Good for me. Good for me.